The financial budgets consist of the capital expenditure budget, the cash budget, and the budgeted balance sheet. We will discuss the capital expenditure budget in Chapter 25. So in this learning objective or this video, we will focus on the cash budget as well as the budgeted balance sheet. The cash budget shows the anticipated cash flow. Because cash is so vital, this budget is often considered to be the most important financial budget. The cash budget contains three sections: cash receipts, cash disbursements, and financing, as well as the beginning and ending cash balances. The cash budget contains three sections: a cash receipts section, a cash disbursements, as well as a financing section. It also provides the beginning and ending cash balances. The cash receipts section includes expected receipts from the company's principal sources of revenue. These are usually cash sales and collections from customers on credit sales. This section also shows anticipated receipts of interest and dividends, as well as proceeds from the planned sale of investments, plant assets, and the company's capital stock. The cash disbursements section shows expected cash payments, like payments for direct materials, direct labor, manufacturing overhead, and selling and administrative expenses. This section also includes projected payments for income taxes, dividends, investments, and plant assets. The financing section shows expected borrowings and the repayment of the borrowed funds plus interest. Companies need this section when there is a cash deficiency or when the cash balance is below management's minimum required balance. Data in the cash budget are prepared in sequence. The ending balance of one period becomes the beginning cash balance for the next period. Companies obtain data for preparing the cash budget from the other budgets and from information provided by management. The cash budget is prepared after the other budgets because the information generated by the other budgets dictates the expected inflows and outflows of cash. In practice, cash budgets are often prepared for the year on a monthly basis. To minimize detail, we assume that Hayes Company prepares an annual cash budget by quarters. To prepare the cash budget, it is useful to prepare a schedule for collections from customers. This schedule is based on the following assumptions. 60% of our sales are collected in the quarter sold, and 40% are collected in the following quarter. Accounts receivable is $60,000 as of December 31st, and it is expected to be collected in full in the first quarter of 2020. In the first quarter, Hayes collects the $60,000 that was outstanding at the beginning of the quarter, as well as an additional $108,000, which is calculated by taking the $180,000 of Q1 sales and multiplying that by 60%, so that the total receipts in the first quarter are $168,000. In the second quarter, the company collects the remaining 40% of the first quarter sales, or $72,000, as well as $126,000, which is 60% of the second quarter sales of $210,000. Second quarter receipts are $198,000. In the third quarter, the company collects the remaining 40% of the second quarter sales, or $84,000, and 60% of the third quarter sales. In the fourth quarter, the company collects the remaining 40% of the third quarter sales and 60% of the fourth quarter sales. At the end of December, the company hasn't collected 40% of the fourth quarter sales. We will report that as a receivable on the balance sheet. The next step is we need to prepare a schedule of expected cash payments for direct materials. It is based on the following assumptions. 50% is paid in the quarter purchased and 50% is paid in the following quarter. The accounts payable of $10,600 at the end of December will be paid in the first quarter of 2020. In the first quarter, Hayes pays the balance of its beginning accounts payable balance of $10,600. It also pays the $12,600, which is 50% of the first quarter purchases of $25,200. The total payments in the first quarter are $23,200. In the second quarter, it pays $12,600 for the remaining 50% of the first quarter purchases, as well as $14,600, which is 50% for the second quarter purchases. The total payments in the second quarter are $27,200. In the third quarter, it pays for the remaining 50% of its second quarter purchases, as well as 50% of the third quarter purchases. In the fourth quarter, it'll pay for the remaining 50% of the third quarter purchases, as well as 50% of the fourth quarter purchases. At the end of December, the company has not paid for 50% of the fourth quarter payment. We will report that payable on the balance sheet. The solutions to this exercise will be provided in another video. Hayes Company's cash balance is based on the following assumptions. The beginning balance is $38,000, and Hayes wishes to maintain an ending balance of at least $15,000. They expect to sell their short-term investments for $2,000 cash in the first quarter, and 100% of their direct labor is paid in the quarter incurred. So to obtain the direct labor payments, you simply need to look at the direct labor budget. Manufacturing overhead and the selling and administrative expense payments are paid in the quarter incurred. I want you to go back to both of those budgets and simply include all the items except depreciation. Management intends to purchase a truck in the second quarter for $10,000, so show that as a payment. Hayes is also going to make equal quarterly payments for a total of $12,000 for their income taxes. And loans, as well as the interest, is repaid when there is sufficient cash. This is the cash budget for Hayes Company. All right, let's take a look at Q1, and we'll start with the beginning balance, which is $38,000. From there, we're going to add our total receipts of $170,000 to arrive at our total available cash of $208,000. We list our disbursements, and if you add up our total disbursements of $182,500 and subtract that from our total available cash of $208,000, you get an excess of cash available of $25,500, and that is the ending balance. All right, a couple things I want to mention before we move on to a new topic. When it comes to the manufacturing overhead and the selling and administrative expenses, make sure you exclude depreciation from those amounts. Right. The ending cash balance of Q1, $25,500, becomes the beginning balance for the second quarter. Hayes will need to borrow $3,000 in the second quarter to maintain a minimum cash balance of $15,000. Since there is an excess of cash available over disbursements of $22,500 at the end of the third quarter, the borrowing plus interest is repaid in this quarter. The solutions to this exercise will be provided in a separate video. The budgeted balance sheet is a projection of financial position at the end of the budget period. This budget is developed from the budgeted balance sheet for the preceding year and from the budgets for the current year. Pertinent data from the budgeted balance sheet at December 31st have been provided. This is Hayes Company's budgeted classified balance sheet as of December 31st. The computation and sources of the amounts are explained in the next two slides.